All right, welcome everybody. Hope you guys are having a wonderful day. So, this is going to be the 3-step framework in learning ICT concepts, or learning pretty much the best way to learn his concepts and the best way to apply his concepts in the live markets. I've watched all of his videos that he's uploaded for free publicly on YouTube, like his core content, his Sniper Scout series, his Market Maker Model series, his 2022, 2023, 2024 mentorship that I've been recently watching. And in my opinion, you don't have to learn every single one of these things. You don't have to watch all of his content to understand that these 3 steps that I'm going to show you guys here in this video today are going to be the best approach, the simplest approach, and in my opinion, just the right approach into applying his concepts in the live markets. So the best way, in my opinion, to approach and to apply his concepts is learning this first step, because everybody learns it from bottom to top, and we're going to go from top to bottom. So the first thing that you guys want to learn, in my opinion, are going to be market profiling. These market profiles. What am I talking about? What do I mean by these market profiles, right? The first thing is you want to learn weekly profiles, right? The weekly profile approach is going to be the best for a beginner because you're not going to be in the markets every single day. It's going to force high probability setups. Then after you get a little more experience, you want to start diving into the daily profiles approach. Now, if you guys don't know, I have recently uploaded the weekly profile and the daily profiles on my YouTube video. So if you guys haven't watched those videos, go and watch those 2 videos and then come back to this video, because it's going to make a lot more sense. And I'll go ahead and link those 2 videos in the description below, or I'll just put it on the top right of the YouTube video here on the little cards that you guys can click on, and you guys can go and watch those 2 videos and then come back to this video. Again, it's going to make a lot more sense because I'm going to talk a foreign language if you guys haven't watched those videos yet. So you guys are not going to understand this 3-step framework if you guys haven't learned market profiling. And in my opinion, it's going to be the literal key to your freaking success. It's going to be your aha moment if you guys haven't really reached profitability using ICT concepts. And in my opinion, I don't know why he doesn't talk about market profiling as much as he used to. He used to talk about it a lot, but weekly profiles and daily profiles were just the key to really a lot of other traders' success. Like everybody that comes and learns from me, I usually put them on to market profiles first, and then we go from, again, top to bottom. So market profiles are going to be the first step for this 3-step framework to work. So you have to identify and you have to learn these market profiles first. So I'm going to be showing you guys how I approach the markets every single week and every single day using these market profiles, and we'll start with the weekly profile approach first. So using the weekly profile approach first, this is how I approach the trading week every single week. I will come onto forexfactory.com and look at the high impact news that I have for the week. So if you guys aren't doing this yet, you guys are doing yourself a disservice. Usually if we're doing the weekly profile approach, which I usually don't do, but if you guys are wanting to do the weekly profile approach and ignore daily profiles, then this is what you want to do here. So the way I approach it is I'm looking at no news Monday, all right? But I'm also looking at where the chart, where we're at with price action on the chart and where our draw and liquidity is at, because in my opinion, draw and liquidity is going to be one of the most important things that you guys need to know, like where is price trying to draw up to determine what the weekly profile might be looking like. So Monday, right, if you're doing the weekly profile approach, you do not want to trade on a no news Monday. The only time you want to trade on Monday if there's high impact news. So if we're just looking at this weekly economic calendar here and looking at the high impact news for the week, you want to filter it out by the high impact news, which is the red folder here on forexfactory.com, and you only want to trade on Thursday and Friday. Really, these are going to be your possible expansion days, because this is when the most volatility is going to be. So you really just want to ignore the first 3 days. FOMC meeting minutes isn't going to be like a super high probability trading day, because FOMC minutes is not like a FOMC meeting, right? It's just a report that drops in the afternoon. Usually in the morning, it's better to trade the morning session here on this day, because again, FOMC meeting minutes is not that important. It's really the FOMC meetings that are super important. So you want to trade on CPI day, post CPI. It's very important. You want to trade post CPI at market open. You don't want to trade before, you want to trade after. Okay, same thing for PPI. So filter this out, and then you want to just focus on these 2 trading days here and let Monday, Tuesday, and Wednesday play out. Again, Wednesday is optional if you want to trade in the morning session on a day like this, or you can trade the PM session if you want. Totally up to you, but usually on a week like this, when it looks like this, you want to trade post CPI and post PPI on Thursday and Friday, because these are going to be your expansion days in that weekly profile. So again, after we've identified the news for the week, now we've identified what days we're going to trade. And again, this is going to force high probability trades. You're not going to be in here every single day looking at the 1 second time frame, the 15-second time frame, the 1 minute time frame, you're going to be waiting for those high probability days, which is going to fall on Thursday and Friday. So let's take a deep dive into the weekly profile that just passed and the week that just passed, and we'll go ahead and break it down day by day. All right, so here's the week that just passed. Here's the weekly opening here. So you can see as the week opens, it opens higher, sweeping the previous day, which is Friday's high. It ends up sweeping that liquidity there. And if we start going onto the lower time frames, like I said, we don't want to trade on Mondays, right? We don't want to trade on no news Mondays, and I'll show you guys why you don't want to trade on no news Mondays if you are looking at the weekly profile approach. And again, we're going to look at the daily profile approach, and we're going to break down this whole week doing these 2 market profiles, and then we'll go on to the second step of this 3-step framework. It's going to be quite a long video, so go watch those market profile videos if you guys haven't again, and then come back to this video. It's going to make a lot more sense. So the weekly profile the weekly candle opened up higher here to sweep the previous day high. And if we're looking at the 4-hour chart here, we're actually tapping into this 4-hour order block here, this up close candle there. We're actually tapping into that 4-hour order block. So we sweep liquidity and we open higher on the weekly candle. So this is telling me that we might want to go lower before going higher. Just looking at Monday, again, we're not trying to trade Monday if we're using the weekly profile approach. We only want to trade on Thursday and Friday this week, okay? Because that's when CPI and PPI, that is the high impact news drivers for this week. And that is going to be our highest probability days. Okay, looking at how Monday's opening and how the weekly candle's opening, we're opening higher, sweeping liquidity, and we're drawing lower, right? Right here, we don't really have a solid bias. Like if we go to the 15-minute chart, you can see why we do not want to trade Monday, right? It's very high resistance. It's a no news Monday. There's no volatility here. There's nothing here, okay? Now, if you're a gambler and you just want to come in here and just try and trade all this chop, right? If we go to the 5 minutes, this is very, very choppy. Right, the weekly candle came up, swept, and now we're just consolidating here in New York session. It delivered lower off a 4-hour order block, which makes sense, right? Well, again, we'll get into that for the daily profiles, but this is not a day you want to trade for a weekly profile approach, right? If we just go ahead and play this out, yes, it did deliver lower, right? This is what you want to do. You just want to ignore Monday. You want to ignore Monday. You really just want to ignore all the non-high impact news event day, okay? Because if you are just ignoring Monday, Tuesday, and Wednesday and just focusing on Thursday and Friday, I'll go ahead and show you guys. If you just ignore the first half of the week and just focus on the high impact news of this week, which is Thursday and Friday, because we have CPI and PPI, this is going to actually force you to take high probability trades only, okay? So coming into, like if you ignore Monday, Tuesday, and Wednesday, again, Tuesday and Wednesday were good trading days, and I'll explain how you would use daily profiles instead of the weekly profile approach. We use the daily profile approach. I'll explain how you could have caught all of these and you could have identified and you could have had the correct daily bias 100% for each single one of these days using the daily profile approach. But if you're using the weekly profile approach, you just want to trade on high impact news days, right? You just want to trade on Thursday and Friday because those are going to happen at a key time. It's going to happen at 8:30 and on both days, actually. CPI 8:30, PPI 8:30, okay? So coming into the trading day on Thursday, we want to wait for 8:30 high impact news, right? So the weekly profile here, if we're looking at the 1 hour, looks like a classic Monday low of week or a classic Tuesday low of week because we have an SMT divergence here with ES. So we have an SMT divergence there. We're tapping into a rejection block, I think, on the 4-hour chart. Yeah, we have a rejection block here that we're tapping into right here on the new, well, this is a classic Tuesday low of week, right? Because this is the new daily candle opening for Tuesday. So we come down, we actually have SMT divergence with ES here. ES sweeps this low and Q doesn't, makes a higher low, and then we keep pushing up. So the weekly profile is bullish. So, you know, just ignoring the first 3 days and looking at Thursday for our first trading day, Thursday and Friday, we're looking at NQ to possibly draw up to this high right here, this buy side liquidity, right? So it removes all the stress, it removes all the guesswork on where the weekly candle is going to go, and it just forces you to take high probability trades. Okay, so I turned on the weekly candle here, so you can see how the weekly candle opens lower. We have an SMT divergence on Tuesday, so it's a classic Tuesday low of week. We've been expanding higher, so the weekly profile is bullish until proven otherwise. Now, if we're coming and zooming into this Thursday trading day, we also have nice highs up here, right? We've swept the Asia highs right there, Actually, we actually have equal highs here at Asia, right? So we have nice equal highs, and we have the previous day high up here for our potential draw on liquidity, because order flow is bullish on the higher time frames, on the 4 hour, 1 hour, etc. And we're expecting bullish price action, right? So we want to wait for 8:30 news driver because it is CPI. So you can see CPI releases here. We sweep the equal highs here of Asia. So we sweep the Asia highs there. And now we have relative equal highs right here at the previous day highs. So we've swept the buy side there at Asia highs. And now we came back down to sweep the sell side here from Wednesday, the afternoon sell side there. And now we just want to wait for market open, right? We want to wait for post CPI. We don't want to trade right on this news candle. We just want to wait for post CPI, right? And we want to identify potential key levels or PD arrays that we can use for this trading day. So we've swept Asia highs. We're tapping into a 1 hour fair value gap here. So let me go ahead and mark this out. Oh, let me go ahead and mark this out. 1 hour fair value gap there. And you can see we're tapping into this. So using time frame alignment, right? This is where you find your intraday trades, right? We're only trading on Thursday. We're looking for some sort of trade here, either bearish or bullish. So using time frame alignment, we want to go on the 5 minute now, right? Since now we've swept this sell side, we're getting pretty close to this internal sell side in this 1 hour fair value gap. So we want to mark that out for a potential draw. And then we want to wait for post CPI. We want to wait for market open, right? So let's go ahead and go to market open here. So you can see we just consolidate, and then market opens right here. So this is market open, right? So we have a potential drawdown here, this internal sell side in this 1 hour fair value gap. We have relative equal highs up here. And a quick tip for news highs and lows, that's a very strong magnet for price to gravitate up towards, right? Is the news highs and lows. So you can see we just consolidate here. If we just keep fast forwarding here, we can see as soon as this candle opens, it actually opens lower into that sell side, this new 15-minute candle. So it's very important that you want to pay attention to open, low, high, close, the concept of open, low, high, close on each candle, because each candle has that, or open, high, low, close. You do not want to short a open, low candle. You want to short an open, high candle, right? So we're not looking for shorts since this manipulated lower on a new 15-minute candle opening, right? And again, this is just the weekly profile approach. This video is going to be quite long, so sit back, relax, grab some popcorn, take some notes. So you can see we come down, manipulate the 840 low and this internal sell side in this 1 hour fair value gap. And also, just a quick bonus, we're also in discount of the previous daily range. Okay, so that's very important as well. So we're hitting a discounted sell side, and we're in a discounted PD array. Okay, so we end up sweeping this low, this internal sell side, and now we have relative equal lows up, or relative equal highs, sorry, up here. Okay, so we end up sweeping this low. And if we fast forward, we could see we end up sweeping that low, and this is the start of the 950 macro. Okay, so we just want to wait now for a CISD. We want to wait for a change in the state of delivery to confirm that this is going to go bullish, right? So on the 5 minute, just staying on the 5 minute, we don't want to zoom into the 1 minute or anything, because we're in a 1 hour fair value gap, right? This is a 1 hour FVG, all right? So using time frame alignment, we want to look at the 5 minute, and we want to look for confirmations of a buy model, or the market switching to a buy model or buy program on the 5 minute chart using time frame alignment, if that makes sense to you guys. Okay, so 5 minute, we just want to wait for a body closure above the opening price of this big, thick, black down close candle, which is called the Drake candle, for those that don't know. If you know, you know. But we want to wait for a body closure above the opening price of this down close candle here that swept and manipulated the sell side levels. Okay, so we just want to wait for a body candle closure above that. So we end up getting it right here. Okay, so this is where you'd want to set your limit. And we actually took this trade on live. For those of you in the Discord, you guys already know we took this trade on live. So we set a limit here on the CISD, and you could put your stop here on this low, or you could pretty much put your stop below the breaker low right here, right? Because we have a breaker right next to the CISD. Anytime we have a change in the state of delivery, a breaker block is going to be right next to it, okay? So you could put your stop at the breaker low, or you could put it just a little bit below this low right here that got swept, right? the internal sell side low. So if we put a limit here, this is about a 2.72R. If you put your stop above here, this is about almost a 4R trade. So again, we ended up actually taking this trade. This isn't no hindsight BS, right? We actually ended up taking this trade live. I actually called this whole move out live in the group. So again, if you guys want to like study, you know, if you guys want a good group, a good community, shameless plug, I know it's going to be down in the description below, but we want to wait for a change in state delivery, a buy program off the 1 hour fair value gap or off a 1 hour PDA rate. And you can see how we just consolidate around here at the CISD, and notice how the bodies are not closing below the opening price of this down close candle, right? After we close the body above this, it's using this down close candle as support. And that's what made me confident in this trade, because we had no body closures below the opening price of this candle here. So that makes it high probability. We have a unicorn model here, or actually, sorry, not a unicorn model, but we have a change in state of delivery and we have a breaker block here. It actually is a unicorn model because we technically do have a fair value gap overlap, a very small one on the 5 minute, but we're entering on the breaker in the CISD here. So you notice how there's no body candle closures closing below the opening price of this down close candle. Wicks do the damage, bodies tell the story, as ICT says. So you can see 11, actually that's 1055, 11 actually opens lower. Again, no candle closure below the opening price of this candle. Again, you do not want to short an open low. You want to short an open high. This actually opened lower, swept this internal sell side again on the lower time frames, and you can see what happened after. Boom. Target achieved for a nice, again, I had my stop here under this breaker's low. So this is about a 3.75R trade, and I was done for the day. You can see how these days are more high probability than the other ones using the weekly profile approach. Now let's go see what happened on Friday using the weekly profile approach, because again, this is just the weekly profile approach. This is how you do it for a weekly profile approach. You ignore the first 3 days, not always, but just on the high. You just want to trade on the high impact news for a weekly profile approach, okay? You want to ignore the no news days on a weekly profile approach. So let's go see what happened on Friday as well, because this would be the only trade you would want to take on Thursday, because you can see what happened after. We just ended up, you know, just consolidating for the rest of the day. So you don't want to trade that. You want to take the highest probability trade for that day. Alrighty, so this is Friday's price action. We hit that nice trade on Thursday. So same thing, we're waiting for 8:30 news on Friday here. And we're expecting some sort of expansion here for Friday up to our higher time frame drawn liquidity, which is up here, right? This is our DOL for the time being. Again, on the 1 hour chart, you'll see it. It's all the way to the left right there. So we want to go on the 15 5-minute. We want to look for an intraday entry after the news drops. So post news, we want to look for something. Okay, so we want to wait for 8:30. We'll zoom. We'll go ahead and fast forward to 8:30. So here is 8:30 price action. So we could see that it ends up sweeping this high right here, and now we have a nice low down here that we could potentially come down and sweep. And now we're gonna be looking for, you know, our PD arrays. We still have this 1 hour fair value gap here. So let's go ahead and mark that out again. So we still have this 1 hour fair value gap. We actually, this candle here is a rejection block as well. So we can go ahead and mark that out if we want, but we'll just go ahead and use this 1 hour fair value gap for, you know, simplicity's sake. So going to the 5 minute, again, what do we want to look for? We want to look for a change in the state of delivery out of here if we are bullish. All right. So let's go ahead and wait till market open. We've already seen what 8:30 did. It manipulated higher, sweeping those highs right there. Now these lows are very smooth, so I would want to wait for these lows to be swept, and we could wait for 9:30. This is why it's important to just wait for market open, because you never know what market open is going to do, or before. Right here's 9:25. We end up sweeping that low, going deeper into the 1 hour fair value gap. Here's 9:30. Now we have 10 a.m. news, and this used to be a red folder. I don't know why they changed it to an orange folder, but the red folder or the orange folder news is consumer sentiment at 10 a.m., which is also a key time. It's a new 4 hour candle opening, right? So 8:30 manipulated, 9:30 is opening lower. Again, you do not want to short an open low. You want to short an open high. So 9:30 opens lower, right? We're in a 1 hour fair value gap, so we want to wait for a change in state of delivery, or we want to wait for 10 a.m. Okay, so you could, let's just go ahead and zoom into 10 a.m. So here's 10 a.m. news. All right, so this is very interesting. So we're in a 1 hour fair value gap, right? Now, I think on the 15 minute, we also have this rejection block on the 15. So you can zoom into the 1 minute in this case, because we have a rejection block here on the 15. And we're also in a 15 minute fair value gap over here. So if we just use the 15 minute time frame really quick, we could see how we keep tapping into this 15-minute fair value gap, and this actually looks a lot cleaner. So if we go to the 1 minute and we pay attention to the 10 a.m. open, you could see this is very nice, right? This is how I trade every single week. This is my approach. I look for PD arrays on the 15, 1 hour, whatever. If I'm using the weekly profile approach, I'm only trading on these 2 days. I don't take many trades every single week, but we're tapping into that the 15-minute fair value gap. We get a sweep here, and then we get a change in delivery right here. Once a body closes above the candle's high or the candle's opening price, we get a CISD. So this is confirming that we are possibly going to go higher. And you see how 10 a.m. opens lower into that CISD and into this breaker block here. You can enter anywhere right here expecting price action to move up until like this internal buy side there, up in this internal buy side there, up into this buy side. And I'll explain why I was bullish on this day on Friday. I was very, very bullish up until the Asia highs. And we'll explain that here in a little bit using daily profiles. Again, we're going to break every single day down of this last week using daily profiles and why, I was bullish or bearish on certain days. So you could see how 10 a.m. opened lower, tapping into the CISD. And this would be your entry anywhere right here. And you can see how price action just went all the way up to the Asia session high. And then it just didn't do anything after that. It just really just went sideways, right? So your Asia session high would have been the target right there. And there's a good reason why this Asia session high would have been your target. And that's going to be using daily profiles. So let's actually go on to daily profiles next. Again, if you guys haven't watched those videos, go and watch them. It's going to make a lot more sense, but I'm going to explain it as well here in the video. But yeah, this is your first step for this 3-step framework, identifying your profiles, identifying what profiles you want to trade. Do you want to go the weekly profile approach, which is less trades, less stress, more profits? Or do you want to do the daily profile approach where you want to be in the markets every single day trying to find a trade? In my opinion, the weekly profile approach is going to be better for beginners in the beginning because, again, it's going to force high probability days, high probability trades. And this is the framework you want to use. Again, we're going to go more in depth onto this framework and what you want to be paying attention to. But yeah, this is how you do the weekly profile approach and what days you want to trade using the weekly profile approach. Now let's move on to the daily profile approach. All right, so using the daily profile approach, this is actually my favorite approach. This is usually how I like to trade. I'm in the markets almost every single day because I run a group. I'm looking at stuff. If it's not clear and if it's not if I don't see my entry model, if it doesn't make sense to me, I am not going to take a trade. But I am looking, I am tape reading almost every single day. And I like using the daily profile approach a lot more than the weekly profile because, again, I run a group. I like teaching people. I like educating people on these things. So this is the approach I personally like to take here. So identifying first your daily profile. So if you guys haven't watched the daily profile video, go and watch it. It's going to make a lot more sense. So what we want to pay attention to here going into New York, because I am a New York trader. I don't trade Asia or London session for this very reason. I have to wait and see how Asia session and London session play out in the New York AM session. So I like seeing what Asia session did. I like seeing what London session did going into New York, because this is going to tell me what the daily profile is. Is it going to be a London Judas, Asia Judas, New York reversal daily profile? Is it going to be a Asia London reversal, New York continuation daily profile? Is it going to be a Z-day profile? I have to know these things in order for me to have my daily bias correct. So for Monday, I was bearish on Monday, and I'm going to be explaining why I was bearish even through all the chop on Monday, right? So for example, the weekly candle and the daily candle, right? Because it's Sunday opening. So the daily candle opens higher immediately to go and sweep the Friday high, which is the previous day high here. We end up sweeping the high there. And if we go and look for a PD array that is sponsoring this move lower, it's very important for daily profiles. We have a 4-hour order block right here that we're tapping into. So we literally tap into it once on Friday, and then the new weekly and daily candle opening opens higher to sweep that liquidity and also tapping into a higher time frame PD array, right? In that daily profile video, I told you guys to look for 1 hour or higher PD arrays in premium of the range, right? This is premium of this range right here. Mark out my Fibonacci from this high to this low in the range that we're trading in. You can see it's a little above OTE, so it's in deep premium of the range. We end up sweeping that buy side at the new daily candle opening. So if we go to the 1 hour now, This one makes sense. This move from Asia or the daily candle opening makes sense. And you can see how London displaces lower, right? 2 a.m. it opens lower, but then at 3 a.m. we come down and we close a body below the 2 a.m. low, right? Which is London opening. Okay, so we displace lower. We're breaking structure. We've already swept the previous day high. So what I'm looking for here is this sell side down here on the 1 hour chart, right? This 1 hour swing low. And now if I go to the 15 minute, we get a deeper understanding of what happened here. So you can see 230 opens lower. We come up, we sweep liquidity, and then we have a change in the state of delivery here during London session. Okay, so we tap into this CISD. Again, you can use the wick to wick. I like to use the body, but we also have right under that CISD, which is what I used here on Monday, was this fair value gap. Okay, so looking at this fair value gap that was formed in London session, again, this move makes sense, right? The sponsorship that moved this whole, like the sponsorship from this high, from the daily high, is correct. This is a true high of day because one, it swept the previous day high. Two, it tapped into a higher time frame PDA rate in a premium of the range. So this whole move going into London and going into New York, when New York retraces, makes sense. It makes sense, right? That's how you can tell a true high of day to a fake high of day, right? Because if this didn't sweep the high, it didn't tap into a 4 hour PDA rate. Let's say this opened up and it failed to sweep and we just made like equal highs right here, then I would have expected a New York reversal up into the Asia highs and stuff like that. And I'll explain. There was plenty of daily profiles like this week, and this was a really good week for daily profiles. And honestly, every single week is, because this thing repeats every single day, every single week. It's not going to stop. So you can see how 930 opens up here, fails to tap into this 15-minute fair value gap. We have equal highs right here. So I was live with my group here, and this came up to here, and I was looking for a 1 minute change in state of delivery out of the 15-minute POI using time frame alignment, right? Again, a breakdown of time frame alignment is, if you're looking at a monthly PDA array, you want to pay attention to the daily, look for a daily reversal in the form of a CISD. If you're looking at a weekly, you look at a 4 hour. If you're looking at a daily, you're looking at a 1 hour. If you're looking at a 4 hour, you're looking at a 15. If you're looking at a 1 hour, you're looking for a 5. If you're looking at a 15 POI, you're looking at the 1 minute. If you're looking at a 5 minute POI, you're looking at the 15, 30 seconds. So since this is a 15-minute fair value gap, we're sweeping this buy side here in that 15-minute fair value gap. I want to go on the 1 minute and look for a CISD here out of that 15-minute PDA array. And what do we get here, right? We get the equal highs here. We don't have the structure for the CISD, so I wait for 1030. You can see 1030 opens higher. Again, you want to short on open highs. You don't want to short on open lows. Okay, so we get a CISD as soon as we close a body below the opening price of this last up close candle before we swept liquidity there. So we end up sweeping liquidity here on the new 15-minute, 30-minute candle opening, and then we get a CISD right here. So this whole candle, right? This whole candle right here is a CISD, right? As long as we're below the opening price of this candle and we don't sweep this high, we're good, right? Even in choppy conditions like this, you can still bank on a day like this for using daily profiles, because you can be confident that these highs up here aren't going to get taken, right? We have a 15-minute change in delivery, so this shouldn't get above the London high, right? This should go down to our higher time frame target of this sell side down here on the 1 hour chart, right? All of this sell side right here should be swept today. This is a Asian smart money reversal, New York continuation daily profile. And you can see how using this approach here, the CISD and time frame alignment approach off a 15-minute POI and combining the daily profiles, we can get very high probability trades. And you can see that the daily candle here opened higher, and now we're moving lower, right? So we're expecting this to work out off this 1 minute CISD out of this 15-minute POI. So if I go ahead and play this out here, you can see here at 2 p.m. we open lower and we go down to sweep all that liquidity there for a total of a 9.3 RR. So very, very clean daily profile. And then combining this framework, you guys understand how this works. So let's move on to the next day. All right, so here's the next day. So coming into New York session, we want to identify what Asia session and London session did. So you can see Asia session here in this red box just consolidated, and then London session at a key time ended up sweeping the Asia session lows, going into a 1 hour rejection block right here. Okay, so this is a classic buy day. This is a London smart money reversal, New York continuation and expansion daily profile. So we would be aiming for previous day high up here, and then the internal buy side right there that you guys see right here, the swing high. So very, very simple. Like I said, in that daily profile video, you want to look for 1 hour or higher PD arrays, okay? And again, we are in the discount of this range that we're trading in, right? That we were trading in this week, the Tuesday, last Tuesday's range right here. Pretty much trading in the bottom portion of that range, right? So if we mark out our fib, you can see we're in discount. And also on top of this, we also have an SMT divergence with ES right here at these lows. So daily candle open lower, Asia session consolidated, London between 2 to 5 a.m. sweeps this low into a 1 hour rejection block. So if you're up during London session and you see this turtle soup happen, you want to look for a change in the state of delivery off of the 5 minute. Oh, and what do we get here? A CISD right there. And not even on the 5 minute, if we go to the 1 hour, you can see how we get a CISD up here on the 1 hour chart as well. And this works really, really well if you're paying attention to a 1 hour chart, because you're using daily profiles. Again, using time frame alignment, the daily candle responds really, really well to 1 hour CISDs. So you get the confirmation as soon as we close a body above this down close candle that swept liquidity that caused the SMT. So this should be a protected low. We sweep in London, we get the 5 minute CISD. So this is switching to a buy program. So going into New York, you can be confident that this is going to move higher up into your draw on liquidity, right? So right here, 930 opens up. Right here, it opens up lower into what? Into this order block right here. So we end up tapping this order block or this breaker block. So if we go to the 1 minute, I think there was a very nice entry model here. We ended up tapping into the CISD right here, or this breaker right here. You could use that. But on the 5 minute, this was super, super clean because we tap into this this 5 minute fair value gap and we ended up respecting it here. So we ended up tapping into that 5 minute fair value gap. Again, using daily profiles, we shouldn't get down into here. We shouldn't even come down into here. But if we would have, this would have been a very nice entry. Okay. So you can see how price just absolutely just rushed up to those buy side liquidity levels very, very quickly, right? Again, using the daily profile logic and then finding an entry model on the lower time frames. This is personally how I approach the markets every single day and every single week. Okay. So very, very clean London smart money reversal, NY continuation expansion to the previous day high right there. So let's move on to the next day. All right, so moving on to the next day here, you could see how the daily candle opens lower into a 4 hour fair value gap. Okay, so using time frame alignment, we want to use the 15-minute chart for our intraday profile, or our, sorry, not intraday profile, our intraday day trading entry, right? We want to look for 15-minute CISD because we tapped into that 4 hour fair value gap. Let me go ahead and mark that out real quick. I just had a brain fart, excuse me, guys. So 4 hour fair value gap, tap into there, and then 15-minute. So this is at 3 in the morning. We ended up sweeping this low. So now we're waiting for a CISD on the 15-minute to confirm that this is going to go higher. We ended up getting it right here. So once a body closure closes above the opening price of this down close candle that swept liquidity or that tapped into that 4 hour POI, we just want to look for a CISD out of that. Again, you can see how the daily candle opens lower into here. And now Asia session, what did the Asia session high use for a sponsorship going into London session and coming into New York? What did the Asia high session use right up here, right? What did it use to sponsor this move lower? There's no fair value gap. There's no order block. There's none of that, right? You can see the wicks here at 3 a.m., right? 3 a.m. key time for a reversal in London. So again, we were even tapping into this 1 hour fair value gap. So we can even look at the 1 minute. But you can see how we have a nice buy side up here in the form of relative equal highs going into Wednesday's trading session, right? And we're looking for a 15-minute CISD because we're paying attention to that 4 hour fair value gap right here, right? So we get the 15-minute CISD. There's no sponsorship. It doesn't make sense that Asia session moved lower, right? We literally just opened lower, and Asia session high is a very sus high. We also have relative equal highs right here, right? Because this high looked like it wanted to come up into here, but this is a fake high of day, right? Because this is the current high of day before, New York expanded higher, right? We have buy side higher. Our weekly profile is bullish. So going into today, we're tapping into a 4 hour bullish PD array because the 4 hour order flow is bullish. We have relative equal highs. Our DOL is up here. We also have a DOL right here, right? Our DOL. And we come back to the 15 minute. So we're just looking for an entry model here going into New York, right? We don't have any high impact news, but we have our confirmations here on the lower time frames off a higher time frame PD array. So we just want to zoom into New York open, right? We want to come into 9:30. So this is 8 a.m. So where is 9:30? This is 8:45. This is, okay, so this is, all right, so this was 9:30, right? This was 9:30 right here. And again, you could use the whole candle right here. You don't have to just necessarily use the opening price. You could use the whole candle here. New York manipulated lower into the CISD that was formed at 3 in the morning when London reversed. So this is a London smart money reversal out of a higher time frame POI. And then we aim for the Asia highs and the higher time frame draw on liquidity up here in the form of relative equal highs. And bonus, we had an SMT divergence right here with the ES. Okay, so out of this 15-minute CISD or OB, we want to look at the 1 minute time frame, right? We want to look for a change in the state of delivery on the 1 minute time frame. So we're tapping into this order block right here. And now what do we get here? So the last down close candle, we get a CISD right here, right? This last down close candle before we swept liquidity right here would be the confirmation. As soon as we get a body closure above that, I'm ignoring this fair value gap right here. I don't really care about this fair value gap. Yes, it's meeting some resistance, but you could see when the macro started here at 950, right? I'm paying attention to time, which is also the second step of this step, this 3-step framework. I know we've been on the profiles for a long time, but I'm showing you guys this is the 3-step approach, right? So 950, we come down, we tap into that CISD. This is where this occurs, and this is where you would enter, right? Your entry would be right here on the CISD, and you would put your stop loss right here where we swept liquidity, and then you would aim for that higher time frame draw for a 3.81R, right? Very, very simple. And then we ended up hitting that at 1020. Very, very simple framework here, guys. It doesn't take a fucking genius to do this. It's not super hard. As long as you follow this framework and use daily profile logic every single day and wait for confirmation entries instead of being a dumbass and trying to turtle soup every single move and only showing the winners, just wait for confirmation entries. It's so simple. It's not hard at all. Okay, so the daily profile here was a London smart money reversal, and look at that, it comes all the way up to that draw on liquidity there. So the daily profile for this day was a London smart money reversal, New York continuation, and expansion up into the draw on liquidity. It's that simple, guys. Super, super simple. Let's break down the last 2 days, and then we can get into the timing aspect of the second step in this 3-step framework. Okay, so Thursday's daily profile, I'll just give it to you guys. This was a Asia Judas, right? Fake high of day. CPI ended up sweeping the highs up here, causing a new high of day here, but we have relative equal highs, and our draw on liquidity is higher. So we are bullish. Order flow is also very bullish on the higher time frames. Tapping into a 1 hour POI using time frame alignment. We just want to go to the 5 minute, look for our CISD here. I just broke this down in the weekly profile approach, but you could see CISD ended up holding. No body closures below the opening price of this candle. We're aiming for higher, and we actually took this trade on live with the group. So go ahead and break down the I'll go ahead and break down the Friday's trading day as well, because this video is getting quite long. So let's go ahead and break down the Friday's trading day as well. Okay, so for Friday, we had PPI at 10, and then we had consumer sentiment at 10 a.m. So we had PPI at 8:30, and then consumer sentiment at 10, excuse me. So we're tapping into this 15-minute fair value gap since Wednesday. Tapped into it there. Rejection block as well in the 15-minute, but really just focus more on the fair value gap here. So using time frame alignment, again, we want to look at the 1 minute out of a 15-minute POI, right? And now you could see we get a change in delivery here after sweeping this low. So it shouldn't get below this low after getting a change in delivery. 10 a.m. opens lower into this breaker block and change in the state of delivery. So you can enter anywhere right here expecting 10 a.m. to be expansion to the upside to at least the Asia highs. Why the Asia highs? Why are we looking at the Asia highs? Because first of all, we have relative equal highs right here with the Asia high. Asia high ended up sweeping the previous Asia highs here in Asia session. Now, what did we use besides an SMT divergence and the sweep of the highs? We didn't use any PD array to sponsor this move lower going into New York. So I was big bullish. I told the whole group, I'm like, I'm big bull today. I I wasn't really trying to trade Friday, if I'm being honest, because I had a very good trading week this week. So I just skipped out on Friday, but this was a very, very clean framework. But I was bullish, just, to give you guys for the record, I was bullish on this day. I know a lot of people were bearish expecting this low to be taken, but we don't have to take that low. Once we get the confirmation on the 1 minute time frame out of this 15-minute POI, whether you're using the rejection block or the fair value gap or even the 1 hour fair value gap that was right here, we could look at CISD on the 1 minute. Now, some people in my group are telling me, well, why didn't you use this CISD right here on the 15-minute, right? Because we came up, we ended up sweeping the high, and then we changed delivery right here at 9:15, right before market open. Now, I don't really like trading pre-market, and the reason why this CISD did not work, can anybody guess it? We were in discount of the previous day range. That's number one. And also, if we look at the 4 hour, there is no 4 hour PD array sponsoring this move for a change in the state of delivery. So there's no 4 hour PD array being used for the CISD to make sense, right? You just have to use logic here in these daily profiles and even time frame alignment. It has to tap into some sort of POI, into some sort of 1 hour or higher PD array, right? For daily profiles. For CISD, for time frame alignment and CISD, you want to make sure it's tapping into its correlated, time frame alignment for the CISD to make sense. Okay, so this is how you can use daily profiles to identify where the drawn liquidity is, what the daily bias is going to be for that day. This is how you do it. This is how I do it, and this is a super simple 3-step framework. And I'm going to show you guys the second step here. I'm going to explain what the second step is, and then third step, and then you guys can, go. I'm going to let you guys go after this. I know it's been a very, very long video. But yeah, let's get to the second step of this 3-step framework. All right, so the second step to this 3-step framework, now that you guys know what market profiles are, how you use them, and how you approach the market using market profiles, after I just explained it for the last 40 minutes and show you guys how I personally do it and what I look for every single day, this is how I actually trade. And if you guys want to trade live with me, I have a free trial going on for the Discord. You guys can come on here, see how I call the markets live in front of 100 people. But yeah, so the second step of the 3-step framework is going to be time. Okay, the aspect of time. Everybody learns this so different. Everybody learns this backwards. Everybody's learning it from entry model and then time and then market profiles. No. You should learn market profiling first, so you know where the daily candle is going to expand to and where the weekly candle is going to expand to before you get into the entry models, before you get into the time aspect and the timing, because timing in trading is so important. I can't emphasize that enough. But the 3-step framework in this is going to be time. Okay, time frame alignment, timing. What time are you taking the trade? How is the candle opening at this time? That's what you guys want to pay attention to. So for example, right, we'll just use Friday as the example here. I'm going to go quick because I've taken a lot of you guys' time. So timing. Okay, now that you identify the daily profile for this day, if you're using the weekly profile approach, you are bullish, right? Because you're only trading on Thursday and Friday. You're identifying the daily profile as a Asia Judas because Asia didn't use anything to sponsor this move lower. The weekly profile is bullish, right? You're only trading on Thursday and Friday if you're using the weekly profile approach. Now combining the daily profile on top of the weekly profile, you can see how this is starting to blend together. You are bullish because your drawn liquidity is higher up to this high right here, right? So just using drawn liquidity, you are bullish because you are expecting the market to draw up to here since Thursday did it. And Asia session didn't use any PD array to sponsor this move lower going into New York. You're tapping into the 15-minute fair value gap using time frame alignment. You want to look for a CISD on the 1 minute, and you want to pay attention. This is the most important part. Listen up, guys. You want to pay attention to what time you are taking the trade. 8:30 manipulation, 9:30 again comes lower. We're expecting 10 a.m. to do something because it has high impact news. 10 a.m. opens lower. It opens lower. Pay attention to what times, okay? Especially the new 1 hour candle openings. Whenever there is high impact news at these certain times as well, you want to pay attention to those because those are going to be your key times. 9:30 is a key time because of market open. 10 a.m. is a key time because of a new 4-hour candle, new 1-hour candle, new 30-minute candle, new 5-minute candle, new 15-minute candle opening. Pay attention to when these candles open and how they open. Very important. And what they open into, right? Get into this 15-minute fair value gap. We end up getting a sweep. We push up, we break structure, we get a CISD, a change in state of delivery, confirming that this is switching to a buy program. We wait for 10 a.m., right, for a pullback or to see how it opens. 10 a.m., no top wick, opens immediately lower into the breaker block and the CISD, right? So you want to enter ideally right here or anywhere right here on the lower time frames. And then using the daily profile logic, this is how you can maximize your reward. And this is how you can minimize your risk. You maximize your reward using the daily profiles because the Asia high just doesn't make sense. We have relative equal highs up here, right? With the Asia high, and it doesn't make sense because we didn't use anything to sponsor the move lower. And then the weekly profile, just to blend that in, you are bullish because the order flow in the 4-hour and the 1-hour and the higher time frames is bullish. Your drawn liquidity is bullish. It's higher. So you enter down here for the most, like the smallest risk and then the highest reward using the daily profile up to these Asia session highs. And you can see how this, if you entered on the CISD and you put your stop right there, and you pushed all the way up to here, look at the RR. It's a 6.4 RR. And it would have been smaller if you entered like on the 15 seconds somewhere up here. It would have been a 13R or something like that. So you could see how when you combine the timing, it's very important. Notice how 1-hour candle opens. You never want to short an open low. You never want to long an open high. It's very important. Rewind that, rehear that. Okay, it's very, very important. Another aspect of time is paying attention to the macros, okay? Top of the hour macros. That's going to be every single, these 20-minute intervals. So it's going to be every single 1-hour candle, the last 10 minutes of the 1-hour candle, and the first 10 minutes of a 1-hour candle. So this is going to be top of the hour macros, right? So the macro starts right here. The 950, right? 950 to 1010 macro, right? So 10 a.m. news opens lower, and then we deliver during the macro, and 10 minutes after the macro ends, or 15 minutes, 16 minutes after the macro ends, it just keeps grinding higher up into that buy side, up into those relative equal highs where Asia session, made those relative equal highs. So very, very important that you pay attention to the top of the hour macros for entries, or if you entered before the macro started, pay attention because these macros, the job of these macros is to either deliver it to the drawn liquidity or rebalance a fair value gap. That's all these macros are doing. And if it doesn't do it within the macro, pay attention to the next macro, okay? These are the only macros you need to pay attention to and the only intervals of time throughout the day that you need to pay attention to, right? Once you blend all of this together, the timing, the opens of the candles at certain times throughout the day, like 9:30, 8:30, 10 a.m., 11 a.m., 12 a.m., 12:30, 1, right? 2, 2:30, 3, 3:30, 3:50 to 4:10 macro. Like all these times, pay attention to them in the times that you guys are trading, because usually from 9:30 to 11 is the best time to trade, and you usually will find a trade within here. Using this framework right here, I almost guarantee you guys will find a trade every single day using daily profiles and using this framework right here that I'm teaching you guys. Pay attention to this and pay attention to how key times open and what they open into, right? The macros is just like the cherry on top. It's when your trade will deliver usually, okay? So let's go into the last step for this 3-step framework right here. So the last step for this 3-step framework, let me find my little drawing right here, is going to be, you guessed it, the entry model, okay? So the 3-step framework, very, very simple. Identify your market profiles. Identify how you want to trade. Do you want to do the weekly profile approach or do you want to do the daily profile approach? After you've identified that, wait for New York session to start. Do not trade the Asia session. Do not trade the London session. If you do not have experience doing that, do not just wait for New York. Okay, that's my best piece of advice here for market profiles. Wait for New York, especially the daily profiles, because you need to see what Asia and London session did and what they tapped into to sponsor the move lower or higher. That's how you get your true high of days or fake high of days or low of days, right? You want to see what Asia session and London session like tapped into to sponsor the moves higher or lower. Now, the second thing you want to pay attention to is time. What times are you trading, right? If you're trading the New York session, you want to pay attention to 9:30, 8:30, 10 a.m., 11 a.m., right? Okay, here's a quick tip, little gem right here. If you've paid attention this long, if 10 a.m. is choppy, right? This is a perfect example because Thursday actually did this, right? If 10 a.m. is choppy, like it was on Thursday, because a lot of people got chopped up here, right? If the hour of 10 a.m. is choppy, 11 a.m. will distribute higher. It's going to be distribution. So 11 a.m. started here, right? So 10 a.m. chopped and 11 a.m. cleaned it up all the way up until 12, right? So if 10 a.m. is choppy, if you're paying attention to 10 a.m. and how it opens, you want to pay attention to 11 because if 10 a.m., this is only if 10 a.m. is choppy. If you notice it's consolidating, 11 a.m. will clean it up, okay? So that is the function of 10 a.m. 10 a.m. should be distribution or continuation or even reversals. But if it doesn't do that and it's just chopping throughout the whole 10 a.m. candle, 11 a.m. will clean that up. That's a little gem for you guys. So again, second step in this 3-step framework, you want to pay attention to time and timing. Pay attention to top of the hour macros. Pay attention to how the key times are opening and what they're opening into. And then the third and final step of this 3-step framework, that is the simplest way to apply these ICT concepts and the best way, in my opinion, is entry model. That's what everybody learns first is fucking entry model. And that's why they fail. That's why their entry models don't work, because they don't know the timing aspect and they don't know market profiles. That's why they fail, because they learn entry model first, and that's the only thing they pay attention to. They don't pay attention to market profiles. They don't pay attention to time and timing, because with market profiles, you will understand draw and liquidity a lot better, and you'll understand daily bias a lot better. And now once you learn the market profiles and the time and timing you're taking the trades at, your entry model comes last, right? For example, your entry model could be the unicorn model, which in my opinion is the best one, right? Go to Thursday again. Thursday is a really perfect example of this, right? 9:45, new 15-minute candle, opens lower. We sweep the sell side liquidity. We've swept all sell side liquidity. We're in discount of the previous day range. And now we get a unicorn model or a CISD off of here, right? We have the breaker. So this is our entry model here. The CISD time frame alignment, we aim for the buy side liquidity, the Asia session highs or the fake high of day, or the news candle, the news data candle, because that's a very sensitive area and that's a good magnet for price to reverse up to, right? Very, very good example there. And then right here, once we have all our framework down, we have the daily profile potentially identified. We have time frame alignment on our side. Now, the last thing that we need to incorporate after identifying our correct daily profile, and we have time frame alignment, we have a CISD. Now we just look at the entry model. We either enter on the order block, the breaker block, the unicorn model, or an inverse fair value gap if you guys want to get handy with it, right? So if you're looking at any entry model that you're using, this works with any entry model, inverse fair value gaps, unicorns, breakers, CISDs, anything that you guys can think of. If you're looking at this inverse fair value gap right here, look at that. It taps into it perfectly. And you have SMT down here with ES, right? For my inverse fair value gap guys, I don't trade inverse fair value gaps, but this is a really good example, right? We sweep liquidity. We have SMT. This is a valid inverse fair value gap. We push up. 10 a.m. opens lower, right? Key time opens low. So we need to push up and make that high. At the very minimum, if you enter here, you can just take it off here when 10 a.m. makes a new high. And it sweeps liquidity and it leaves equal highs up here. Actually, it swept that high, so you could take it off there or put your stop at break even, right? So if you entered on this inverse fair value gap here and set a limit there, and you put your stop here where it swept, and you aimed for, and you had the logic of a daily profile, well, all of a sudden your trade turns into an 11.62 RR trade, right? What could that do for you? Once you identified your weekly profile, if you want to do that approach, you identify the time and timing and how these key times open and what they open into. Your entry model is going to come last, whether it be inverse fair value gaps, unicorn model, off a CISD, off a breaker, off an order block. That's where you enter. and then you hold your trades using the daily profile logic, using the time and time frame aspect, and then there you go. That's how you do it. And this is my simple 3-step approach to these markets every single day. And this is how I trade the markets every single day, is using this 3-step framework right here. Okay. Identify your market profiles, use timing, pay attention to the key times, 8:30 if there's high impact news, 9:30 if there isn't, 10 a.m. for continuation or reversal. If 10 a.m. chops, use 11 a.m. You should be done after that. If you trade PM session, pay attention to 12, 12:30, and 2 o'clock. Okay. All the way to close. All right. And then entry model is going to come last. Once you identify the first two, entry model is going to be your easiest thing to identify. All right. So that is my 3-step framework in approaching and applying ICT concepts to these live markets. And in the next video, I'm actually going to be backtesting this 3-step framework, showing you guys actual backtesting data on this 3-step framework and how easy it is to apply to the live markets. So I'm actually going to be showing you guys how you guys can do this in real time. And I do this every single day in real time. So if you guys want to join a free trial Discord, you guys want to see how I trade and murder these fucking markets every single day, the link for the Discord for the free trial will be in the description below. Come see how we do it. Come see how I read these markets live. And you guys are going to see, bro. You guys are going to see. I'm very underrated right now as a trader, in my opinion. I don't want to glaze myself, but super underrated. But yeah, this was a very, very long video. Hopefully you guys enjoy this video. Hopefully you guys, learn something off of this video. And yeah, I'm going to be on my YouTube grind. So expect a lot more high quality content, a lot more, really good content, really valuable content. This was about over an hour long video. So those of you that watched the video all the way through, I got you guys on a discount for the Discord. Use code BULLISH for 15% off for every single payment, as long as you keep your sub active. So there you go, code BULLISH for 15% off. But yeah, hopefully you guys enjoyed this video. It was a very, very, very long one, but yeah, have a good rest of your guys' day, and I will catch you guys in the next one. Peace out, guys.